Hi everyone, welcome to the Tesla Economist. Please hit the thumbs up and don't forget to subscribe. Okay, so you're invested in Tesla. Congratulations. So now what do you do? How do you stay invested in Tesla? Warren Buffett says, our favorite holding period is forever. So there you have it. That's how you invest in Tesla. You hold forever. End of story. Except this is about as good advice as telling someone who wants to lose weight to eat less, or telling someone who wants to be rich to earn more. So let's talk about how you hold forever and any potential pitfalls that can stop you holding for this elongated period of time, how to avoid temptation and hold the line. So first off, despite how successful the company is and how well the stock has done, your shares give you no income. So if you're looking for an investment to live off, at least in the short term, it may be hard to hold, so bear that in mind. I'm sure inevitably Tesla will offer dividends, but I often get fanboys coming back at me when I suggest this, saying that we don't need dividends, we just want to grow the company. But there will come a time, and probably in a few years, where Tesla will just make too much money, so they simply can't spend it all. And I'm sure they will start releasing some dividends by then. So bearing in mind there may be no income for some time, one of those popular reasons people sell is because they have to. For any investment, it's always bad to sell when you have to, whether property or stocks. It's best to sell when you want to, or because the price is so good you can't resist. So put yourself in a position that you have enough income to get by that you should never need to touch your shares. People get very focused with investing and trading. Put your shares away like it's your retirement and forget about it. Well, obviously you won't forget about it because it's just way too exciting, but you get my point. Now, a lot of people that think being in the stock market means you're a trader, which means you're buying and selling shares or speculating. This is not investing. Really, it's not investing. Some people make a lot of money on trading, but there is a reason. They're likely very intelligent and thoroughly analyse all sorts of heuristics that we wouldn't even begin to know. Compare this to some of the Tesla investors I meet who think the stock has gone so high that it's a good time to sell and buy back again cheaper with a nice profit. This is nothing but gambling. And okay, the odds might even be slightly on your side at times, but even the house loses on occasions too. I love the phrase, time in the market beats timing the market. And it does. Just take a look at Apple or Amazon's graph and imagine how on earth you might have possibly predicted those swings and traded through it. The fact Tesla is so volatile does make it tempting, but you need to ignore that. It's human emotion. Human emotion is not a naturally good investor. You have to let it go and defy it. Also, bear in mind, you're paying tax on each trade as well. So, I repeat, do not try and play the market, unless, of course, you totally know what you are doing. I research Tesla full time. With that knowledge, I actually do play the market. But I never ever do it with my shares. I'm not selling them. I use options, and I've made videos about those before if you're interested. But be very careful with them. And options are a perfect segue to the next potential hazard, covered calls. These are the opposite of options. This is when a shareholder sells an option. The shareholders receive instant income for the sale, but if the stock rises too much, then the option holder will buy your shares from you for an agreed upon price, which will be lower than the market price. For example, you sell one options contract of 100 shares, you receive $2,000 in your account just like that. But if the stock goes up 10%, you might have made another $5,000. But you had to sell your shares, and then you received $2,000. You also now have 100 less Tesla shares, and will need to rebuy back at a higher rate. This is all done over a fixed period of time, usually a few months, and Tesla stock has been known to double over such small periods. Ouch, that would really hurt to have missed out on a double up. If you have any stop loss orders, pause the video and go and cancel them right now. In any one day, Tesla could dip to activate your stop losses, then bounce back and then some. Stop losses are not for real investors. You've got to see through with your conviction. In fact, go and replace the stop losses with buy orders. That's what you should do when the price falls, is buy more, not sell. If you like Tesla at the previous price, now the price has come down, it should look even more attractive. Oh, right, but that's not human psychology. Remember, we have to block emotion out. Emotional investors get slaughtered. No, but just accept it. If you can't, then you don't have the right conviction, and it's not for everyone, and it's not easy. But it's one of the tricks to getting rich. Be rational with your money, not emotional. I've even heard some hedge funds or institutions can somehow see what the stop losses are and then intentionally hit them to force sales by shorting the stock to drop the price, then buying the dip. which is just another reason not to trade. It's so gamed out there, and you are not on the inside. However, I would say this would be a lot harder to do now Tesla is in the S&P. FUD, or fear, uncertainty and doubt. This describes all the Tesla headlines we used to get in the mainstream media. The quality control issues we have to hear about. The competition is coming. The new Tesla killer is on the way. Well, we're still waiting. These are some of the popular Tesla FUD cliches. Wow, they used to love ripping into Tesla. But who are the media's largest spending advertisers? Legacy automakers. Who is the media's lowest spending advertiser? Tesla. It's just good business to keep your customers happy. But sounds more like crony capitalism if you ask me. Anyway, the FUD is strong with Tesla, overly strong, along with how the short position used to be. It used to be the most shorted company. It's rumoured that oil companies and legacy automakers were the ones shorting Tesla so much just to keep it down, and it worked. It stopped the stock price from rising, which made it harder to raise capital by offering more shares. So holding to make money might sound easy, just like it sounds easy to lose weight by not eating. But when it comes to practice, it's not as easy as it sounds. Thanks for listening. Please hit the thumbs up and don't forget to subscribe.